Hello traders and welcome to another video review. Today is Tuesday, January 9th, 2024. Let's find out what's going on the economic calendar today. As you can see, I got only medium and high important data releases for today. They have been sorted out already. So what do we have here? Well, the bunch of data from Japan had been released overnight. Household spending, Tokyo Core, CPI data, all of them were mixed basically, and it doesn't look like they have a great influence on the Japanese yen yet. BRC retail sales monitor from the UK had been released overnight, and data surprised market participants because they deteriorated towards 1.9%. Building approvals and retail sales in Australia spikes higher. The market expected deterioration to -2% in building approvals. Actual number is 1.6, and the retail sales beats the expectations of 1.2% with the actual number of 2%. Unemployment rate in Switzerland rises from 2.1% to 2.3%. German industrial production deteriorates even further. Last reading was -0.3%. Actual reading is -0.7%. Bad data from Germany. Unemployment rate in the Eurozone is scheduled for release at 11 a.m. It is expected to stay at the level of 6.5%. US trade balance and exports and imports data are scheduled for release at 2:30. In the meantime, we got trade balance and building permits data from the Canada. Later on, we got the most important data for today, scheduled at 6 o'clock p.m. Short-term energy outlook from the US and 3-year note auction 1 hour later. At the end of today's session, 30 minutes after 10 o'clock p.m. we got the API weekly crude oil stock data, so we'll definitely take a look at the crude oil today. For now, let's take a look at the euro, and then of course let's take a look at the Japanese yen rated pairs. So what's going on the euro dollar? Well, not much. Basically, the euro dollar is consolidating around 50 and 100 periods moving average on a 4-hour chart. We got nice hammer towards the 61% Fibonacci retracement. The bounce was kind of impressive, but it was only it was only lasting for like a 1 hour or something like this, and then the market goes back towards the level of 1.0948, and now around the level of 1.0956 the market is consolidating. Key technical resistance is 1.1019. Only if we break above this level, we can say that the bulls return to the euro dollar. Otherwise, we should expect some sort of the continuation of this movement to the downside, especially if the dashed black line, which is the 61% Fibonacci retracement of this upwave, is violated, right? Then of course we can go lower. We can test first the level of 1.0818, and then even the 8 December swing low at 1.0722. So that was the euro dollar. Let's find out what the US dollar to Japanese yen is doing. As you can see, this data from the Japanese economy didn't help the yen too much. We got the movement to the upside recently completed at the level of 145.99, so that was the 4% up move. It's not basically this correction to the upside is slightly bigger than the last one. Nevertheless, there is no follow through with this movement to the upside. We just reversed. We got a pin bar, then we got the spike to the downside. So kind of a bearish engulfing pattern together with the pin bars. They are always a problem for the bulls, which is why they deteriorated lower. And right now we retraced some of the recent movement to the upside. So we already know how high we get. Let me just move this situation here and apply the Fibonacci retracement. Let's see how much did we retrace from these highs. So right now 38% has been retraced already, and we are approaching the level of 50%, which is located roughly around 143.15. Then we got the technical support 142.85. Then we got 61% the Fibonacci retracement 142.46. That's the last one, the last let's say important technical level for the bulls. Let me just find out where is the rectangle, so we can make some sort, there you go, we can make some sort of the let's say a zone here, so between 50 and 61%. Okay, so we got the zone here and the technical support. So this is the zone, right? This is the demand zone, we can say it, not technically correct, but this is the zone where we should see some kind of a return to the uptrend, if there will be any, of course. This is the zone when the return to the uptrend should happen. So that's the US dollar to the Japanese yen. Let's find out what's going on the crude oil. So the crude oil is following our red arrow, and we are going lower. As you can see here, we got this red arrow since our last analysis. The level of 73.85, 74.10 was too high for the too strong for the bulls. We tested this level twice, so we got the potential local double top, and we deteriorated significantly because right now we are trading even below 70.86. So we might remove this line here. That level will act as the technical resistance. Right now all of these blue lines will act as the technical resistance for sure, and this is it. This is how the situation on the crude oil looks like. Bears are in charge of the market. They can barely break above the level of 60, then the spike down is being made. Last movement to the upside from the hammer-like candle was only was 12.5%. Since then, almost 80% of this move was retraced. Right now, outlook remains bearish. Next target for the bulls is 68.78. Then the lows of the hammer. Let me just place a line here as well. The lows of the hammer candle is 67.71. This is the technical support as well, a kind of an important one. And then of course we got one more level here in case of the further movement to the downside, 66.81. So the outlook on the crude oil remains bearish in the short term. Nothing changes here, and weak and negative momentum on the 4-hour chart supports the bearish outlook. Last but not least, let's take a look at Bitcoin. What is Bitcoin doing? We have a new yearly high. 47,338 was the high. After the short-term trend line resistance was violated, the next target for bulls, as you can see, is located here, 48,200. So that's the last target for the bulls. Let me just place it here. That's the last target for the bulls before the around the level of $50,000 will be eventually hit. Of course, if this kind of a momentum will be still present on the market. Right now, if we speak about the momentum, RSIs are roughly around the level of 70. We spike up towards the level of 75. So we are coming off the extremely overbought market conditions on the 4-hour chart. Local high and yearly high and swing high is located at 47,338. So of course we need to break above this level in order to move even higher. Now these levels here, 45,932, it will be acting as the technical support, 45,519, and even this level here will act as the support here. So right now we got a beautiful breakout to the upside. We are finishing the wave 5 to the upside. We got targets on the chart. Everything is going as anticipated. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.